What is going on, Alpha Hunters? The markets are closed for the week and the last week of August, August 31st. So let's take a look at what went on this week. And we didn't really have too much, just a couple of kind of, I would say, pretty important catalysts, important things to kind of pay attention to. We had a little bit of a gap up here, kind of start the week. Had a nice little pullback to kind of start the week on Monday, kind of a choppy one. And then Tuesday, nice little gap down, come out, got bought up. And on the live stream on Tuesday, I kind of thought we would be a little bit more bullish towards the end of the day, especially even Wednesday, as we go into the day Wednesday. And we didn't really do that. We kind of mellowed out there towards the end of the day. And then Wednesday kind of had a little bit of a gap down, just traded lower until middle part of the day and had a nice little bounce off the low at least. And then we got the big one, NVDA earning. Obviously, that is the main company around driving the AI kind of tech story that's been going on for almost 2 years now. But nice little gap up there Thursday morning. NVIDIA actually did pretty good on earnings. I'm not going to go into all of it, but they didn't trade that well on Thursday. They actually were the ones that were down, and basically everything else was kind of up on Thursday. So we had a nice little gap up on the markets, traded higher midday, kind of got back to the beginning part of the week there on Monday, and then kind of just rolled back over. Barely eking out a gain, I believe, on Thursday. It might have been just completely flat. So that was kind of the way Thursday went, and that was basically one of the more important catalysts that we had this week. We also did get jobs data, which came in line Thursday morning, so not really a big deal. Friday morning, though, we did get PCE, inflation. It was basically flat in line, not really a big deal there either. So Friday morning, nice little gap up, traded back down, got a little bit negative there middle part of the day, and then we had a pretty good rally. Ended at the week highs there for Friday. Now, what was kind of interesting is I kind of thought we would have a little bit more bullishness here that middle part of the week as we went to NVIDIA's earnings, and then even coming out of it a little bit as, NVIDIA did do good. They still have pretty good growth. They're not growing as fast as what they were, 2-3 quarters ago, 4 quarters ago. But yeah, you're not going to continue to grow at the pace that they were initially. So yeah, it just kind of makes sense. They're having a little bit of slower growth now. But what's been kind of interesting, the past 2 weeks, we roughly chopped, or we were roughly trading in this range. So I know last week we started out Monday, we just traded a little bit higher, but for the base of the past week and a half, a little bit over the past week and a half, basically just traded within this range. So yeah, that is kind of how the past 2 weeks for the most part have gone. And honestly, the way we ended this week, it looks pretty good. All right, taking a look at sector rotation for the week. Tech underperforming the most. Probably a lot of that has to do with, Tuesday, a lot of tech companies weren't doing all that well. NVIDIA was actually okay, but then Wednesday, NVIDIA was okay. A lot of other tech companies not good again. And then Thursday, NVIDIA actually wasn't good at all. And then a lot of other tech companies were actually pretty good until you got to the afternoon. And we saw a pretty good drop off there on pretty much everything tech. So yeah, tech was really kind of just weak throughout the week. Then you also had discretionaries and communications also underperforming. Real estate actually in line with the market there. And then staples, energies, healthcare, utilities, industrials, materials doing pretty good. And financials leading the week. All right, so this is a chart that kind of went out Thursday, I believe Thursday, pretty much. The U.S. pending home sales index just broke pandemic lows and is now at the worst level ever. This went out by Forex Live, but there was other places you could have got this, and it's actually just a tracked data point. And yeah, what's really kind of interesting is we know basically since the beginning of July, yields, which we'll look at here in just a second, have been trending down, have been trading lower, but we have not been getting any bump. And the fact that we're continuing to see home sales really kind of drop off here, that is a quite shocking and really something that I'd imagine a lot of people are really starting to pay attention to since we are breaking that COVID pandemic low from back in 2020. As far as the VIX, we did have a little bit of activity this week, not too much. It looks like we're going to roll over here from kind of the shape of the way things look here over the past 2 weeks. So yeah, it kind of makes sense. We're back down to the mid-teens. We could definitely keep going lower. All right. There you go. The beginning, it's hard to believe the beginning of the month that we were all the way up to mid-60s, and now we're just back down to the lows that we were putting in but roughly 2 weeks ago, back down to low and mid and low teens. The DXY, the dollar index. Very nice, strong finish to the week on Friday. Looking pretty good. Kind of talked about this last week. Got down to this level. So it's going to be, hey, people see this level. They're going to come out and buy the dip this week. We got a little choppy there Monday, Tuesday, and then Wednesday, Thursday, Friday just kind of took off. The other kind of important levels that's kind of keep in mind. So if we do roll over this week back lower, let's keep in mind about this roughly 99.7 level. If we get back down to there, probably going to see some choppiness and potentially people buying the dip, because that is basically the lowest level until you start to go back to some major kind of different levels back a couple of years ago. All right, taking a look here at the GLD Gold Trust. Well, it's going to be kind of tough for gold to go higher if dollar DXY continues to go higher, but I would still rather be bullish on any kind of dips. I was kind of really liking the way it's consolidated up here, but if we want to drop it off one day, we might roll over a little bit more. And that might coincide, inversely with the dollar, so we'll just have to keep an eye on that one. Yields. So like I just mentioned, we were kind of talking about yields in that pending home sales index. And yeah, yields, back from early May, not even early July, sorry. Early May, we have dropped off quite a bit on yields, and that has not been the catalyst to get home sales going again that many people thought it would. And we had that pretty good drop off there to kind of start out the month of August. Yeah, I mean, we're starting to climb here. We'll see how far we go. If we get back above this level, around 4%, I mean, you're probably going to be looking for the next run would probably be up to like 4.15% or so, which would be roughly this low. That'd be my hunch, I guess. Anyways, as for now, yields kind of looking okay. I think it's going to be really kind of a bad, and I've said this before, it's going to be a really bad scenario if we see the economy roll over and yields go higher. That would be a catastrophic scenario. 10 and 2 inversion saw some pretty good movement this week. Look at that bounce there on Tuesday and Wednesday, and we are right under that freezing water mark, right? So we are about to breach through the ice, and we'll be back up above that zero line. So we'll be uninverted. I would imagine it probably happens this next week. And we'll be looking at some things this next week on yield curve, uninversion, and how long until we see some major bearishness after we uninvert on the yield curves, that kind of stuff. At least here on the 10-2. So yeah, this would be an interesting one. Just know that we are really close to uninverting. Probably does happen this next week. So HYG looking pretty decent. I mean, if yields go higher, I don't know how much I would really want to be trusting bonds, but this is the more of the risky part of the bond market, HYG. So kind of looks decent. If we get a nice little strong pop, I'd probably want to sell it though. LQD, the investment grade corporate bonds. A nice little drop there on Friday. It wasn't like that on the live stream earlier Friday, but yeah, that does not look that great. It says probably going a little bit lower at least. So yeah, I'd be curious to see what kind of happens here. It could also be, that breakout that we had mid-August, kind of coming to some previous highs, even all the way down to that 20 EMA there, around 111 to maybe like 110.8 or something like that. And so, yeah, we got a little bit of a room, a little bit of a zone here that you'll probably see some dip buyers maybe coming in on the LQD. But I would keep an eye on bond yields. TLT. Well, we saw what yields did. Yep, expect TLT to be looking the exact opposite. So very much does look like that. We had that huge run to start the month. Kind of dropped off, pulled back, rode the moving averages higher, and it looks like we're breaking that down. So, doesn't look great. Doesn't look great. Kind of talking about this week. Yeah, we were getting kind of tight in here and tried to make a bounce off that 20 EMA Thursday, but it just did not hold through. Then we wound up just dropping off very hard there on Friday. So that does not look good. And combine that with what yields are doing. Yeah, maybe we will see yields continue to go higher. Maybe we'll see bonds probably eventually, maybe all of them dropping off here relatively soon. I mean, we're going to have different highs in here. We're going to have one here around 94.5 to 95. We're kind of coming into one here around 96, but the deeper we go, if we get below this low that we put in back on August 8th, 95 level or so, yeah, it's not going to look good. Man, it's not going to look good. All right, taking a look at the RSP equal weight SP 500, and one of the things that we kind of started out this week looking at was the possibility and scenario of what to expect over the next couple months, and I'll probably just reiterate that here. But we did have a nice little pullback to start the week, nice little push, very strong look to end the week there on the RSP. Looks really good. But one of the things that we were kind of talking about earlier in the week was looking out for this scenario where the RSP and the S&P 500 continued to go higher, make new highs. RSP is making new highs. The SPY is not. We'll look at that here in a sec. And the Qs is not. They are they are really underperforming, and they are not really all that close to being at new highs. As far as the DIA looked pretty good. Nice little pullback into the moving averages. Continue to push higher as we went to the end of the week. Looks pretty solid. Probably just keeps going higher next week. The IWM Russell 2000 ETF has not gotten back to its highs of 2024, but it is rapidly approaching. I kind of like the way it ended there, at least on Friday. Nice little lower wick hammer. Looks pretty good. I would imagine the IWM looks somewhat decent as we go into next week as well. I wouldn't be surprised this thing does pretty good. The Qs, okay, the Qs, big laggers here. Man, past 2 weeks, the Qs have just not been doing well. They ripped it pretty strong from that gap down that we started a couple weeks back on Monday, August 5th. I mean, it was really strong up to that high that we put in August 22nd. But man, the past couple weeks, just really not showing a lot of strength, especially this past week. You kind of thought with NVDA having earnings this week, it would be a pretty good catalyst for tech, but it really just wasn't at all throughout the week. So the scenario I'm going to be looking for, kind of go back to what I was talking about with the RSP, is if the Qs go a little bit higher here, but it doesn't get back up to all-time highs, and we kind of just wind up fading down here over the next couple of months, okay? So if we start to see this little bit of a downtrend or something like that, while also the S&P 500 is, kind of going sideways or something like that, or maybe has a slight uptrend to it, that would make me kind of nervous. But as far as going into next week, honestly, I think the Qs will probably be okay. I think they'll probably just trend higher. I think they're just going to continue to be weak going forward, and we'll just kind of see what happens as we go in the next few weeks. The SPY looks really good, especially with how it ended the week. Nice little continued kind of consolidation here over the past 2 weeks, right into the moving averages. Looks pretty solid here the way it ended Friday, and I would imagine we're probably going to be seeing all-time highs next week, probably like Monday or Tuesday. So it looks pretty good. So if we get to that scenario, kind of like how I was explaining on the Qs, we probably have a nice little run. But if we start to flatten out here, maybe like late September, October, something like that, maybe halfway through September, but the Qs, the Qs are trading down like that, and the RSP is continuing maybe to continue higher like that, that would be something I would be rather cautious about. Obviously you'll see what kind of happens as we go forward. But yeah, if the RSP has a little bit of an uptrend to it like that, and we're seeing Qs be weak, SPY is flat, I'll probably start changing my tone to probably say, yeah, this is not looking good. We have seen some very weak data come out over the past couple of weeks, but it doesn't matter. All that matters is price action. Remember, we don't trade economic data. We trade price action. So it is what it is. I mean, it's going to do what it wants to do. You just got to understand where your stop losses are, where your entry levels are, and where your exit levels are. So other than that, Alpha Hunters, y'all have a great weekend. Take care.